Good evening, everyone. Good afternoon, good morning, depending on the time you're going to be watching this video. So it's SM right here. So in this video, I'm going to be showing you a breakdown of the USD trade of this morning. It was a short scalp, so I'm going to show you the breakdown, my thought process, and I also want to say something that if your trade is not coming from a point of expectation to execution, there's definitely gonna be problem. Are you getting what I'm saying? So yesterday, which was on Thursday, on the 20, on I think 10 was yesterday was 12. Okay, so yesterday we were trying to buy Gbpusd, although I didn't get into the trade, but I was actually looking for buys. So fortunately the trade invalidated us. Alright, so after the trade invalidated us, I decided I wanted to go back to see what I did wrong and why it invalidated me. Okay, so look at this now. So first of all, so this was what I didn't pay attention to. Looking at the daily time frame, I could actually see something because it was clear. You can see a daily key level, or let me know if we use that one. Let's use this particular A shape. Let's go to the line chart now. On the line chart, you can see this particular A shape key level that's here. And before that A shape key level, you can see price. This was a breakout. Price broke out to the downside and then created another A shape key level here. And when we were talking about key level, basis of key level, we said that an A shape key level is used for sales, meaning that we are expecting price to just come into the key level like this, and we're expecting sales. Alright, so that was what we're expecting. So although I didn't see this, I was still looking for buys. What do you see? Price tapped into it, and price closed below. You can see this rejection and a close below. When it comes to building buyers, that's the first point. That's the first thing we wanted to see for building buyers. So we're actually building these buyers from the daily time frame. We are building from the daily time frame, and the way I like to do my own was this. If I'm building from a daily key level, I want it to end on the opposite key level, either this particular key level here or this one below, or this particular one that's here like this. Alright, so that's where my target should be. Or if I just want to play safe, I want to be targeting this particular low, this low that is resting here. Alright, so we have a sweep and a rejection and a close below. So going to the daily 4 hours time frame, we want the 4 hours time frame to give us a confirmation. We wanted to see a break of structure on the 4 hour time frame, a most recent breakout on the 4 hour time frame. So going to the line chart to the 4 hours time frame, what can you see here? You can see price not just one break, but it was a double break. There was a breakout from here, and another breakout, most recent breakout here. This was still yesterday. Okay, this was yesterday. This was what I was supposed to pay attention. I was supposed to pay attention to yesterday that I didn't pay attention to. I'm just trying to show you like what I did wrong actually. Okay, so if you zoom it very well, you can see that this thing closed below. You can even use this. You can see that it was below it. Okay, it was below it from the line chart. So coming back to the candle chart, you can see there was a breakout, a most recent breakout again, meaning that we are bearish. So what I would have just been waiting for, I would have been waiting for price to just come back into this 4 hour key level, and then I follow it down with my continuation model. But this was, look at what I was doing. Go to the daily time frame. On the daily time frame, look at what I was doing. I was looking at this open close key level here. On the open close key level, if you go to the 4 hours time frame, you will see a breakout. I was not looking at my overall. Are you getting me? I was not looking at my overall. Instead of me to pay attention to the overall bias, I was just looking at the current market structure, what price is doing. And what can you see? When 4 hours tapped into this key level, it closed above it with a breakout. Go to the line chart, you are going to see So the breakout at that level, this was the breakout. This was the breakout. So initially for me, what actually saved me was because of my entry model. Are you getting me? So price now break out. So meaning that I was just looking for price to come back into another 4-hour key level, and then I'll start buying. Alright, so my entry was my zone was here, and for like this, I wait for 4-hour to come down to the 4-hour key level, although I refined it somehow to this QM that is here. This is the time, this is what we are paying attention to, this particular 4-hour candle, this one, that one. So coming down to the 1 hour, from 4 hours I like to go to the 1 hour direct to wait to look for my continuation model. And this was what price did, although this was exactly where I was trying to buy from. I was trying to buy from here, but what stopped me from buying, because there was news, there was fundamentals. NFP, was it NFP? Yesterday was NFP, right? Yeah, NFP. So this particular candle was NFP. Yeah, NFP. So it went up, closed above it. So unfortunately for me, because of that, I couldn't take this trade, and this was where my overall target was. My overall target was this high. So fortunately for me, price came back, invalidated me. So that was when I decided to go back to my drawing board to see what I did wrong. That was when I now found that what I did wrong. 4-hour daily rejected from a daily key level. Overall daily rejected from a daily key level. Overall, this was Wednesday. Wednesday rejected and closed below. See, let me tell you something. On Monday, I don't used to trade on Monday. Get it? I can just go to the market to look for possible entry points, but I don't take trades on Monday, except maybe trading cryptos, and but you talk on forex PS, I don't really focus on them on Mondays. Alright, so rejection closed. This was on Wednesday. Wednesday tapped into Monday high and Tuesday high, and then closed below. Meaning that we are now bearish. 4 hours gave a breakout, so confirm the direction. 4 hours breakout, first breakout, second breakout. So my own was to be waiting for this particular key level or this particular one. Yeah, using that other candle, using this week as internal range liquidity, although it tapped into the key level, into the key level, but this was it. So price reacted from here. So my entry model now was that I should drop to the 1 hour time frame. Coming to the 1 hour time frame, I want to see a most recent breakout at that level again. What can you see? You can see a most recent breakout here. A most recent breakout from this level. After the most recent breakout, price came back to this particular key level. And we sold. So this is what I was supposed to do that I did not do. That was what I was supposed to do. So coming back to today, the trade that I took today, so I just came into the daily time frame. I already knew that I was bearish. Coming into the daily time frame, I saw this. You see this rejection and close. You see this particular rejection again, rejection and close, and then you can see this today price was actually reacting from this particular open close again. So I just knew that I was bearish. So where I was going to exit was where the main issue was. So this was to be my target, this low. This was where my target was. I will show you why I adjusted it. Alright, so this was where the target was. So now coming to the daily 4 hours time frame, I needed to see a breakout. And what can you see here? For that time, this particular price action was not there. This particular one. Yeah, forget about that one. It was not there. Alright, so you can see what price did here. Price now swept previous 4-hour candle, swept the high. Sweeping the high, the low was still standing. CRT. Initially for me, this low was supposed to be my target, should be my target. If we are talking from like sweep previous daily high, we expect the low to go. So the low was supposed to be the target. So after that, we saw a breakout on the 4 hours time frame. From this level, there was a breakout. Go to the line chart, you see it. There was a breakout from that level, and because there was a breakout from that level, price came back into that 4-hour level again. So what I need to do is that I go to the 1 hour time frame to look for another breakout in that level. At that my key level, I need another breakout. So this was the candle that tapped in. This was the candle that tapped into the key level. This particular one. This particular candle was the one that tapped into the key level. Let me mark it out so that you can see it. This candle, yep. You can see that was a candle that tapped into the key level. So tapping into the key level, I needed to see a 1 hour breakout again. Well, this was the 1 hour breakout. So before I came into GBP USD, this 1 hour breakout was already tapped. So I was trying to look for a re-entry where I can enter from. So I went to the 30 minutes time frame. On the 30 minutes time frame, I needed to see a breakout again. After price tapped that 1 hour, I needed to see a breakout again. That was just my entry mode. That's how I trade continuations. I trade continuations, yeah. So price tapped 1 hour, tapped into 1 hour key level. I needed a 30 minutes breakout. So coming into the line chart, you can see what happened here. There was a 30 minutes breakout here. This was the 30 minutes breakout. I was already sure that I was going bearish. So which price, where did I now took the trade from? It was from this V-shaped key level that was broken. So I just took the trade. Initially my target was just, this was how the trade was. This was the entry for this trade. This was the entry. My stop loss was just 2.5 pip. Let me just 2.5, yeah, something like this. Yeah, this was the stop loss, and then my target was firstly this level. Yeah, this was where my target was firstly, until a friend. I saw something, so that was why I now put my target here. This level. That was why I now put my target. Yeah, that was why I now put my target. Which was now like this, a 1 to 8. So that was how I caught the trade ball. Currently, where GU is still reacting from is a valid key level to sell from. Yeah, so this particular key level, this particular 4-hour breakout. Yeah, if you check it very well, that is where it is reacting from. So it just came to fill back the 4-hour storyline. They wanted to let's complete it. So 4-hour price rejecting from the 4-hour breakout. Rejecting for the 4-hour breakout, we expect price to take out this particular low. Expect price to take out this low. Yeah. So although I haven't seen my continuation model, if I see my continuation model, I'll be going in exactly. Although if I actually wanted to take this trade, because I wasn't online first, I was not online, so I just came and I saw this. I would have used my confirmation entry that I taught you guys, the 3 candle formation or 2 candle formation, CRT, whatever you want to call it. Swept the previous 1 hour candle, the low is still standing. Sweep and close below, the low is still standing. So I will just take this trade from this A-shaped key level that's here. This particular A-shaped key level. If I want to refine it, I can go to the 15 minutes, yeah, especially 15. Coming to the 15 minutes is going to be like a breakout. Coming to the line chart, you can see a breakout and a retest. That's what it is. So I would have been flipping it, taking it from this QMR while using this one as my internal range liquidity. internal rigid liquidity, and boya. That's where I would have been taking this trade from. Initially, if I wanted to take it, this is where my target will be. Because selling from here, my stop loss will be at this high, this previous high, and then my target will be this low. So this is how it would have been. Alright, so there's this other trade. Let me check on it. GBP AUD. Where are you? Yep, this one also. The same thought process, the same thing. That's the same thing. Okay, let's just check the thought process. Come to the daily time frame. Daily time frame, where was daily reacting from? I didn't really see where it was reacting from, but I knew this was what I saw. It should be this low was swept, price swept this low, that low was swept. Yeah, that was the low that was swept on the daily time frame. So sweeping the low, price also didn't just sweep the low, it swept also last day previous daily low as well. Swept previous daily low. We expect the high to go. So what did I do? I came to the 4 hours time frame. On the 4 hours time frame, I was looking for a breakout. So unfortunately, this was the breakout. This was what the breakout. Okay. Yep. This was what I use as my breakout. This particular thing. That was my breakout. That was what I used as my breakout. Don't use it to, please. If you don't understand what price is doing, just rest. Used it as a breakout. My target was this high. That was the target. So came to the 1 hour time frame. I needed to see my continuation model. I don't joke with it. I needed to see it. So 1 hour tap into 4 hour level. I needed to see a breakout on 1 hour time frame. This was a breakout, so giving me a confirmation that we are indeed going bullish. So that was the breakout. So my own is to look for which key level is there that I can use. So looking at this, although we can actually arguably say that this was where the breakout was. Firstly, this was the first breakout. This was it. That was exactly where my entry was. So there are some breakouts that comes with entries. There are some that don't come with entry that you need to look for which key level price where they are from. Alright, so I'm not teaching my model here. I'm just trying to show you my thought process. So I was buying from there, longing it from here. Stop loss was just, let me go to 30 minutes to find where I kept my stop loss. Stop loss was below this, exactly this level. That was where the stop loss was. Take profit was at this high, 129. So that was it. Alright, so that's just it. So when your system, when you are trading, whether your bias, your entry, or everything, it should be coming from a point of expectation. You can see how I was showing you what I wanted to see. If I did not see it, it means I'm not interested in that trade. So I have to see what I want to see before I can do what I should do. If I see it, that is what we call expectation to execution, meaning that if I don't see ABC, I will do XYZ. Meaning that if ABC is not there, there's no reason for me doing XYZ. Are you getting me? So when your system is coming from a place of expectation to execution, it gives you more edge. Imagine when your system has high win rate and also gives you a high risk to reward. Are you getting me? It's crazy. You get what I'm saying? It's crazy, just like that. Alright, so that's just it. So have a nice day.